Hey guys, welcome back. Sorry I've been away for a while. Chinese New Year is around the corner and I'm helping and thinking of ways to ramp up my production capacity of the best cookies in Singapore. I thought I would just share transparently of what I do with my free time, since some of you are quite interested. Karo Cookie is a home-based business that me and my partner started during the COVID lockdown in 2020. It's a direct retail business model. We operate online and deliver the best pastries direct to your home. I'll link the Instagram page and website down below. You guys can check it out. So just for your information, we might not have much slots left because the demand is much higher than what we can supply. Now I have to take a break from my production ramp because I have been receiving quite a lot of private messages about the recent spook and correction. Quite a bit of you guys are using debt to facilitate your trades. I'm getting worried because this is not my intention. My intention was to share my mistakes so that you guys do not repeat my mistakes. Before I go into the details of how I usually use debt, I thought I should explain to you the market situation right now. 2022 is going to be a hard year to be invested into the stock market. Now why do I say so? To put it into simple words, money is leaving the market. I bought balloons to illustrate this. I think it's the simplest way to understand things fast. This balloon is the money supply, the total amount of money in the world. Now, the amount of physical money is actually a fraction of the money supply. The majority of the money is made up of credit or borrowed money. When interest rates increases, borrowing money becomes expensive. When we borrow debt, we will spend it on something. It doesn't matter if it's an asset or a liability. Nobody is going to borrow money to keep it in the bank. When we spend the borrowed money, the money goes to other businesses or other individuals' income. When we increase interest rates, there will be less spending, less money for everyone, less debt in the system, and this will create a spillover and domino effect. The money supply in the entire world will shrink like this balloon. So when money supplies shrink, there is finite amount of resources to be deployed in the financial market. Valuations will change. Money will move to the most important asset generating company. The market will not be willing to pay for high price to earnings as compared to before. Valuations will come down, PE ratio will shrink, the price will be falling. I've explained the entire scenario in details. If you want to learn and know more about this market correction, I'll link it up here and down below. If you are using leverage at this period when prices are free falling, you'll be caught over leveraged and get margin calls. When you get margin calls, they will liquidate your assets at the worst possible timing. Now, in 2022, sentiments will change. There will be a lot of fear in the market. But when there is fear in the market, it's actually a good thing because asset prices will be mispriced. It is also because of the fear in the market that you should not be using leverage unless you know how to use them effectively. So I know this correction is coming since last year, but why am I staying invested? I shared about my thinking that I don't think the interest rates are going to increase much because US is in too much debt. All the taxpayers' money will just be used to pay the interest. I personally think that we will just have enough interest rate hikes to curb the inflation, but not enough to cause a meltdown or a shrinking money supply. Let's look at where Tesla will be valued at the end of the decade, just on achieving 20 million cars production by 2030. Let's make it simpler for you guys to understand. I don't think the average selling price of a car is coming down much. Even with the Tesla compact cars, we still have semis, Cybertruck, Roadsters and other type of future vehicle that is going to cost more. For simple valuation, let's take 45k of revenue per car produced. By the end of 2030, 20 million cars produced per year times 45k per car is $900 billion revenue in a year. Let's say they have an operating margin of 20%. It is 180 billion profits every year on cars. And because Tesla still has so much forward potential, it is likely to trade at 25 times multiples, which means it is worth $4.5 trillion by the end of this decade, just on selling 20 million cars alone. So is Tesla able to do it? Let's look at this exponential growth curve now, without the two new factories. Full self-driving, energy and Tesla bots will add trillions on top of the 4.5 trillion. So this is how I visualize Tesla in 2022. Tesla's value creation is faster than the shrinking money supply. And because there's going to be a lot of fear in the market, Tesla will likely be mispriced, and it is an opportunity to load up on more Tesla shares. We can look at history and reference 2022, a whole year of flat market with a lot of correction in between. So what I recommend is to buy aggressively on these corrections. Buy Tesla when you don't feel like looking at your portfolio value. Do the opposite of your current emotions. What I want to do in 2022 is to be a net buyer of this market. Let time do its thing. It is stupid to bet against the market from a history standpoint. Just allocate your capital on the best company you can find and let time do its thing. Let's control what we can control. Our emotions, our conviction, and the long term. Do not operate with a greed mindset and use leverage at the wrong time. That is a sure way to wipe yourself out. In my next video, I will share with you how I use debt. I know that even if I don't teach you about this, many will do it anyway. So I will share my framework in the next video. If you like this sharing, give this video a thumbs up, subscribe to my channel if you haven't. I'll see you soon.